If you've received a notice from the IRS proposing a large amount due on account of your cryptocurrency transactions, then this video is for you. One of our latest clients came to us because he got this notice from the IRS. It's a CP2000 proposing an amount due of $10,835. You can see that figure right there. And why was the IRS proposing this figure? Well, if you go down to page 4 here, it gave him some details. Yeah, he didn't report some dividends and things like that, but the main thing was he didn't report some of these crypto transactions on his 2021 tax return. He bought these through Cash App. That's why it says Block Inc. But we've helped clients who bought and sold crypto through other platforms as well. BlockFi, all Coinbase, all the ones that you're probably familiar with or have used if you've been if you've bought or sold cryptocurrency in the United States previously. So, what does all this mean on this page? So this page is basically the IRS showing you. Well, let's back up. So Block Inc., right, Cash App, reported to the IRS that our client on February 6, 2021, sold $2,905 worth of crypto. Okay? So that's your gross proceeds on the crypto sale. So they file a 1099-B with the IRS, and they give a copy to you as well, right? However, what these platforms don't report to the IRS is how much you paid for this cryptocurrency, okay? Your cost basis, all right? So if you don't report your cryptocurrency transactions on your tax return, but the IRS catches wind from some exchange, like on a 1099-B, that you sold crypto during the year, they're going to propose an amount due against you based on your gross proceeds without giving you any credit in that calculation for how much you paid for that crypto. Right, so these figures here in this column, reported by others, this is the gross sales price of the crypto he sold in each transaction. Okay, not his next gain, his net gain. So when you look at the proposed assessment on page 1 here, this proposal is based on the gross proceeds. The IRS is proposing to tax you not on your net, what you netted on those crypto sales, but on your gross. And that's why these IRS crypto audits can be so shocking and so shocking when people get a notice like this in the mail. They're like, oh man, IRS is really going after me for my crypto. Now, caveat here, if you're a tax nerd, you're going to tell me, yeah, this is a CP2000. It's not technically an audit. To that, I say yes, you are correct. It's not technically an audit, but for most people who call in and say, hey, the IRS is auditing my crypto, it's because they got a CP2000. So I'm just talking to the people here, okay? I know what they're going to search in, the search bar is crypto tax audit or, IRS crypto audit, and they probably mean the CP2000 is what they're referring to. Even though, you are correct, all you tax nerds out there, a CP2000 is not, and its response is not technically an audit. So, and the crazy thing is about these crypto audits, like in this case, is you could have had a loss on your cryptocurrency, and you might think, oh, I had a loss, I don't need to report on my tax return. That's wrong, because the IRS is going to come back and try to tax you on your gross, not your net, right? So consider this example. Let's say you bought, during the most recent bull market in crypto. Let's say you bought five Bitcoin. Okay, like at the peak, right, when it was like 70 or close to 70, or let's say $60,000. Okay, you bought 5 Bitcoin for $60,000 each, so you put $300,000 into Bitcoin. Okay, and let's say when the market went down, let's say you paper-handed, okay, and you sold those Bitcoin those 5 Bitcoin for $40,000 per Bitcoin, so $200,000. So you actually had a $100,000 loss there, right? You bought these 5 Bitcoin for $300,000, you paper-handed, sold them for $200,000. You actually have a $100,000 loss. Okay, and let's say because you think I didn't make any money, you actually lost money, you don't report on your tax return. Well, if that crypto exchange that you bought and sold this crypto on reports to the IRS then they're going to send a 1099-B to the IRS for that transaction in which you sold $200,000 worth of Bitcoin, and the IRS is going to propose an assessment assuming that your gain on that transaction was $200,000. Okay, so in reality, you had a $100,000 loss, right? Because you bought it for $300, sold it for $200, and you wouldn't owe any tax, right? If you just filed and reported those correctly on your tax return. In fact, you would have gotten a little deduction for that for $3,000, assuming you didn't have any other capital gains shenanigans, and then that loss would carry forward to benefit you in future years. Okay, but because you didn't report it, the IRS is going to try to or propose to assess a tax based on your gross, not your net. Okay, and that's why these IRS crypto audit letters or CP2000s, they can be so confusing and so frustrating to deal with. So here's what to do if the IRS is auditing your crypto. Okay, step by step. Step one: understand which transactions the IRS thinks you didn't report. Okay, this is very easily done by looking at that section of the notice that we talked about previously. This is on page 4 for this guy. And looking for the list of transactions. Okay, so basically, we know that the IRS thinks that he didn't report these transactions on his tax return, and this is a CP2000 context, right, guys? Like if there's a different context here, let me know in the that you're dealing with crypto and the IRS. Let me know in the comments, and I'll maybe make a video about that. So once you know what transactions the IRS said that you didn't report on your return, what you should do is A, confirm that you actually made these transactions during the year, and B, if so, check to see if you actually did report them on your tax return. Okay? Because stranger things have happened. I have seen it where a taxpayer did report things correctly on their tax return, but the IRS still sent them an underreported notice like a CP2000. Okay, so you want to confirm that what the IRS is saying on this notice is true. And so once let's say it's accurate, right? Yes, IRS, I actually engaged in these transactions on the notice, and I didn't report them on my tax return. You need to figure out what your actual tax liability is for these transactions. Okay, don't leave it to the IRS to figure it out for you. So, and where does this process start? Well, you need to gather your necessary documentation, right, for your crypto gain or loss to calculate how much you actually made or lost in those transactions. This could be very simple. If you use something like Robinhood, and obviously, you don't get, there's no separate key with Robinhood, not your keys, not your coins, whatever. But look, we get lots of Robinhood stuff, right, that comes in our door because people bought and sold crypto on Robinhood, or at least played with the prices on Robinhood, as some purists might say, but they didn't report that on their tax return. Well, Robinhood sends you a gain loss statement, right, that shows your gain or loss on your crypto. Okay, and so it's very easy to see that because it's a self-contained platform. You can't put crypto into Robinhood or take crypto out, because do you actually own it, right? That's the question. Most kind of purists would say no, but anyway, that's kind of getting beyond the scope of this video. It's going to show you your gain or loss in the transaction, right? But this can get more complicated, right? Like, let's say you bought crypto in Coinbase. Like, let's say you bought Bitcoin in Coinbase, swapped it for Ethereum, transferred that to BlockFi. You saw BlockFi. You were getting spooked about all these interest-bearing crypto places going bust, so you took money out of BlockFi, put it somewhere else. Now it's on a hard wallet. So it can be hard to kind of track all this stuff, right? To kind of figure out, what did you actually pay for this crypto in US dollar value when you bought it? What are the taxable transactions on that, right? Because when you swap Bitcoin for Ethereum, that's a taxable transaction, right? Now you have a gain, right, equal to what you paid for the Bitcoin you swapped versus the value, when you did that swap of that Bitcoin, right, / Ethereum. And now you have this new basis in the new coin you have, Ethereum, right? And so let's say, so it can get very complicated, and you have to get all these documents, right? Export all these transactions so that you have them, so that you know what you're looking at. Okay. So it's easier, right? And thankfully that's the case with this client, which is why we're not, charging him, that much money for this case, because these crypto things, they can be extremely time intensive, and the fees are in multiple tens of thousands of dollars. I think for this individual, we charge him I think around $2,000 to help him figure this out and fix this. But let's say you made all your let's say you bought crypto on BlockFi and sold crypto on BlockFi. Let's just BlockFi RIP as an example. That'd be fairly straightforward, right? Because it's all in that system, right? You need to export your BlockFi transaction history, look for what you paid for the crypto, right, and what you sold it for, and those would be your gains, right? Every time you sell it, that would be reported on 1099-B that the IRS would know about. That would have been listed in the CP2000, right? And you just got to tell it, well, what did you pay for the crypto each time you sold, right? But like I was alluding to earlier, let's say you bought the crypto on another platform like Coinbase, okay, and then transferred it to BlockFi and sold the Bitcoin on BlockFi. You need both your Coinbase transaction history and your BlockFi transaction history, right, to figure out, what your basis was in each of those sales. And BlockFi doesn't know, right? Because you transferred them from Coinbase. How does BlockFi know what you, or how would BlockFi have known? I know it's in bankruptcy right now, but how would BlockFi have known what you paid for the crypto on Coinbase? It wouldn't. It's on you to keep track of these records. Okay. So the underlying question you need to ask for each of your unreported cryptocurrency sales is, where did I buy this crypto originally, right? And how did it get to the exchange, right, where I ultimately sold it, or other platform where I ultimately sold it? Okay, and you need to get all the documents and transactions history that can complete that narrative there and fill in that paper trail. NFTs, it can get complicated with that stuff too, because if you buy an NFT with Ethereum, that's a taxable event. So this can be very, very complicated. But once you've kind of figured this out, right, which is a big ask, your basis in each of these transactions, then you know your gain, right? Take your gross proceeds in each transaction, separate and subtract out the basis, right, what you paid for whatever was exchanged in that transaction, and there's your gain, right? You have to figure out if it's short-term or long-term on each one. And then what we do for our clients is once we've gotten to this point, we will actually plug these figures into our tax software, right? And of course, we double check our tax software's math, but we'll actually, prepare a dummy tax return as though the client had done their taxes correctly the first time. Okay, and we will send this to the IRS when we respond to the CP2000 in this case. Okay, so then we have an idea of what the client should actually owe in taxes for these unreported crypto transactions. And spoiler alert, it's probably going to be a heck of a lot less than what the IRS is proposing here. Okay, just FYI, you probably shouldn't file an amended return. If you file an amended return, it could kind of delay things a little bit. I made a video on letter 86C last week. It was published last week. If you file an amended return, the amended return, people are just going to transfer that amended return to the automated underreported unit, right? In the case of a CP2000, they'll send you an 86C saying, hey, we transferred your amended return to this unit. It might just delay things a little bit. What you should do if you get a CP2000 about your crypto is do all the things I just said, right? Figure out what you should actually owe the IRS. And then write a response letter to the IRS explaining what happened, right? And attach that updated tax return that you did as though you had done your return correctly the first time, including that 8949 that shows all the crypto sales you made during the year, right? That's what you should do. And this is kind of I'm not going to show you all the meat of this document here, but we did this recently for a client. This is actually a different client, not the one CP2000 redacted I just showed you, but we basically wrote in and explained basically what we agreed with on the 1099-B. He was actually doing stuff through BlockFi, and what we disagreed with, right? Because the IRS was proposing an assessment based on his gross proceeds of $50,000 worth of USD coin in his BlockFi account. And of course, this is even kind of a different story because the USDC is theoretically pegged to the dollar, so his basis was his proceeds, so there should have been no tax whatsoever on that, right? A little different than the whole, if you're actually doing a coin like Bitcoin or something. But anyway, getting beyond the scope of this video. So basically, you're gonna figure out what you should actually owe, and then explain why that's what you actually owe in a letter to the IRS AUR Auto Reporter Unit. And where do you fax this? Well, you fax it to the fax number at the top of the notice. There it is right there. Just fax it there. It will take them some time to respond. A couple months at the very least to go through your information and, respond to it. They'll probably send you a letter in the meantime saying, hey, we got your response. We need some more time to review it. And then, after that, they might ask you for some more information. Hopefully you attached all the supporting documents for your calculations to your initial response to the notice. And then they'll make a determination, right? And if you've done things right, the determination should be what you, counter propose to them in the notice you wrote. So, that's basically it, folks. The closing letter. Well, there's two kind of closing letters in these cases. I didn't pull any from our database because that just kind of struck me right now. But the notice CP 2005 is when the IRS closes your case with no change to what you initially reported on your return. And the letter 1802C is when the IRS closes the case with a proposed assessment, but hopefully it's a lot lower than their initial proposed assessment. Okay. And then, whatever that number ends up being that the IRS, ends up assessing against you, you either got to pay it, right? Or you got to explore your tax relief options for what you owe. I have videos about tax relief options here on the left-hand side of the screen. My tax relief playlist is on the bottom left of the screen. My video about CP 2000 in general is at the top left of the screen. Of course, if you need any tax help, folks, give us a call at 866-8000-TAX. You can visit our website, choicetaxrelief.com. Thanks so much for watching, everybody. I'll see you in the next video. Bye-bye.